Hello everyone, how's it going? This is Weston Means with eXp Realty here in the San Francisco Bay Area once again for your market update for the month of June 2023. These are the numbers from last month. We're now in July, but the data for every month comes out in the third week of the next month. We're looking at the data from last month. Honestly, just taking a look, it looks very similar to the month before. We're still suffering from a very low inventory problem, so there's just not that much for sale. Not many homes are on the market, and so the competition per listing is still pretty high. I was actually looking at a cosmetic fixer with one of my clients recently in San Jose, and I just talked with the agent this morning. Today offers are due, and she said that she already has 4 offers in hand, all above list price, and she has like 70 disclosure packets out. So maybe we'll be up against even more, maybe 3, 4, 5 more offers. So that just kind of shows you that properties that buyers think they can get a deal on, those ones are still moving pretty fast, and there's a lot of competition. And then also the best move-in ready homes, the ones that have really good staging, the ones that come with pre-listing inspections, these are still selling really fast, pretty much within the first 2 weeks in almost all these counties. And then some of the other ones that don't come with pre-listing inspections, or maybe don't have really good staging or don't show well, these are staying on the market, especially if they're priced too high. If they're not priced at the right price and they're overpriced, they tend to stay on the market for a while, and I'm seeing a lot of price reductions for those type of homes. So let's just jump right into the data for each of these 6 counties that I'm going to focus on. As always, it's going to be Alameda County, Contra Costa County, Marin County, San Francisco County, San Mateo County, and Santa Clara County. So let's go right into Alameda County. The median price for a single family home this June was $1.305 million. That's a 3.6% increase from the month prior, and it's a 6.8% decrease from last year. So prices are still down from last year in Alameda County, and interest rates are right around 6.25, maybe 6.5 for certain banks and certain situations, but prices are still down. Home sales are down 29.9% from last year, and they're down 8.3% from the month prior. Sales are beginning to slow down even month to month. The level of unsold inventory is at 1.2 months, which is very, very low. You're going to see this pattern in all of these counties. Sellers are still not wanting to let go of their extremely low rates from the years prior when interest rates were hovering around 2 to 3%. A lot of sellers were able to benefit from those much lower rates and refinance into much lower payments, and now they're just very comfortable in their homes and not wanting to trade those very low rates for much higher rates. So that level of inventory was actually an increase of 9.1% from the month prior, and it's a decrease of 33.3% from last year. So there's about 1/3 less homes for sale at this time of year than there were this time of year last year. But inventory has actually increased from the month before June. Now, the median time on the market in Alameda County was 10 days this June. That's a decrease of 9.1% from the month prior, and a decrease of 16.7% from last year. What that's telling us is it's actually taking less days for the average listing to sell in Alameda County than it was last year. So competition is still very high, even though the prices are down 6.8% from last year. Okay, now moving into Contra Costa County, the median price this June was $930,000. That's an increase of 4.7% from the month prior, and it is actually an increase of 0.5% from last year. And this is really concerning because we have much higher interest rates in this market, yet the average single family home has increased by 0.5% from last year, which is not incredibly significant, but it is showing that, competition is still very high in Contra Costa County, and people are willing to pay almost the same amount that they were last year, but the interest rates are higher. Now, home sales have decreased 18.1% from last year, and they have decreased 7.5% from the month prior. I think this is again due to the very low levels of inventory. There's just not that many homes for sale, so not a lot of home sales are happening. Okay, now the level of unsold inventory was 1.2 months, and that is the exact same as Alameda County. Very low. It's an increase of 9.1% from the month prior, and a decrease of 42.9% from last year. So quite a few less homes for sale in Contra Costa County in comparison to last year, but they're starting to ramp up a little more as we go into the summer. Now, the median days on market this June was 9 days in Contra Costa County. That's 1 day less than Alameda County. It's a decrease of 10% from the month prior and a decrease of 18.2% from this time last year. So that means competition is ramping up as we're going into the summer. More buyers tend to come out during the summer, and competition per listing is actually higher than it was last year at this time. And we have to remember that June is when the interest rates started hiking up last year, and so that caused a major decrease in competition for a while, and it's began to pick up more as we've gone through the year this year, and we're seeing it increase from May to June this year as we're heading into the warmer months of the year when there typically are more sales. All right, now moving into Marin. So in Marin County, the median price for a single family home was 1.715 million. Month to month, that was a decrease of 4.7%, and year to year, it was a decrease of 7.3%. So prices are actually coming down month to month. That's not the same as Contra Costa or Alameda counties. Marin County is different from a lot of the other counties. As we've discussed on previous videos, Marin County has a lot of very high priced homes. There are quite a few gated communities, private communities in Marin, and so the numbers can get a little wonky when there's just huge differences in home prices in that county. But overall, we're still down 7.3% from last year, and they have gone down from May to June as well. Now, home sales were down 21.3% from last year in Marin County, but they're up 3.4% from May. Unsold inventory this June was at 1.6 months. That's a little higher than Alameda and Contra Costa. They both had 1.2. It is a decrease of 11.1% from the month prior, and actually an increase of 33.3% from last year. So Marin County doesn't always, go along the same lines as all of these other counties. We've actually seen an increase in unsold inventory from last year. So that may mean that there are quite a few more homes that are sitting on the market. It could be due to the higher interest this year. A lot of folks aren't trying to buy these extremely high priced homes because, even if your interest rate is 1% more, your payment is going to be incredibly higher. So that may be what's happening there. Now, the median time it took for a single family home to sell in Marin County this June was 40 days. This is the highest amount of days that we're going to see in any of these 6 counties, followed by San Francisco County, where it's taking 30 days. So again, this is due to the very high priced homes in Marin County. It's hard to find buyers for some of these properties, and so a lot of these very high priced homes stay on the market for quite some time before they sell. Month to month, this was an increase of 14.3% from May this year, which is surprising because as we go towards the warmer months, things usually tend to heat up as more buyers come out and more folks are looking to buy. But like I said, in Marin County, things tend to be a little different. Year to year, it was an increase of 21.2%. So unlike in Contra Costa or Alameda counties, it's actually easier to buy a home in Marin County this year than it was last year. Now moving on to San Francisco County. So in San Francisco County, we had a median price of 1.595 million. That's decreased 3.6% from May this year, and it's decreased 16.1% from last year. This is the biggest decrease we've seen in any of these counties this year. Obviously, I think what happened is San Francisco was very far inflated ever since the pandemic happened. A lot of folks paid very high prices for properties there, and so now that interest rates have gone up, also a lot of folks have gone to remote work. A lot of people have moved out of San Francisco, which has caused a deflation of the prices from those really highly inflated prices over the last 3 years. Now, home sales are down 16.7% from the year prior, and they're up 7.5% from the month prior. So home sales are heating up as we're getting into the warmer months, but they're still significantly down from last year. Now, the level of unsold inventory in San Francisco was 2 months. This is the highest out of any of the counties we're going to go into today. And it's because a lot of folks don't really want to buy these incredibly high priced homes in San Francisco anymore because a lot of people don't have to go into the office anymore. A lot of people have even moved to other states. They just don't need to be around San Francisco anymore. So prices are coming down. A lot of sellers don't want to accept that. So they're pricing their homes at what they would have expected last year or the year before. And buyers aren't really willing to take those prices anymore. So the level of inventory was a 13% decrease from the month prior, and it was a 5.3% increase from the year prior. So there's actually more inventory than there was last year, and it's because the interest rates are higher. And because the interest rates are higher, that means payments are a lot higher for buyers, and so buyers aren't willing to pay the prices that sellers want in San Francisco anymore. Now, the median time it took for a listing to sell in San Francisco this June was 30 days. That's kind of similar to Marin County. Marin County was 40 days. It's a lot more than Alameda or Contra Costa counties, and actually it's a lot more than San Mateo or Santa Clara counties. And again, this is due to the fact that buyers and sellers aren't agreeing on price anymore in San Francisco. That's a decrease of 31% from the month prior and an increase of 20% from last year. So from May to June this year, it actually has become a little more competitive in the San Francisco market. And I'm guessing this is because we're moving into the warmer months and more buyers are coming out. But it is still 20% higher than last year. So it is 20% easier to compete for or buy a listing in San Francisco in comparison to last year. All right, now let's go into the numbers for San Mateo County. In San Mateo County, the median price of a single family home was $2.039 million. This is the highest price county, as always. That is a decrease of 1.7% from the month prior and a decrease of 5.4% from last year. So prices have come down from May to June this year in San Mateo County, and they're still down 5.4% from last year due to the higher interest rates. Now, home sales have increased 3.4% from last year, and they've increased 14.8% from the month prior. And that's a little surprising because in a lot of these other counties, year to year, the sales have actually gone down because the inventory is a lot lower than it was last year. But in San Mateo County, they've actually increased year to year. And as we're heading into June, July, they have increased as well. Now, the level of unsold inventory in San Mateo County was 1.5 months. That is higher than Contra Costa and Alameda counties, which were at 1.2. It's a decrease of 21.1% from the month prior and a decrease of 28.6% from last year. So inventory is pretty significantly down in San Mateo County, not only from last year, but from May to June. Now, the median time it took for a listing to sell in San Mateo County was 10 days this June. That is an increase of 11.1% for both the month prior and last year. So that's kind of funny that those data points were the same, but this means that it is taking a little longer for listings to sell last year and from May to June this year. Okay, now moving into our last county, Santa Clara County. The median price of a single family home in this county this June was $1.825 million. That's an increase of 2.1% from the month prior. It is an increase of 0.3% from last year. So prices are essentially the same as they were last year, only increased by 0.3%, but this is surprising because interest rates are higher and buyers are still willing to pay very high prices for listings in Santa Clara County. Now, home sales were down 14% from last year and they are down 3.5% from this May. So that means that sales are obviously down from last year because there's less inventory this year and sales have actually slowed down slightly from the month prior. Now, the level of unsold inventory was 1.3 months in Santa Clara County. This is very slightly higher than Alameda and Contra Costa counties. It's a decrease of 7.1% from the month prior and a decrease of 31.6% from last year. So there are significantly less homes for sale in Santa Clara County than there were last year, but only a little bit less than in May this year. The median time on market it took for a listing to sell in Santa Clara County this June was 8 days. That's a 0% change from the month prior, so it's just as competitive as it was in May this year, and it's a decrease decrease of 11.1% from last year. So it is actually more competitive than it was last year. And again, this is surprising because interest rates are higher. So what this is telling me is that not a lot of buyers have been deterred. Obviously, some of them have, but it's also because we have way less homes for sale this year than we did last year. And so the competition per listing is still high. It's 11.1% higher than it was last year. Now, all this to say, going through these numbers, what I'm really thinking is that I'm surprised that the prices have not come down more than they have because interest rates are quite a bit higher. What's happened recently is the CPI report came out, I believe it was last Wednesday, and they came in at numbers that seemed pretty acceptable to the Fed. The inflation numbers are coming very close to what the Fed has been targeting. The mortgage rates in response came down, and that may be giving us more of a bump in home sales and a bump in buyers being more aggressive in the market. But as always in real estate, things happen very slowly. So even though the interest rates started hiking up last June, it's now been a year and we haven't seen that much of a decrease. Some of these counties have actually increased, even though it might only be by 0.5%, but that's really surprising because there's much higher interest rates, which means people are going to have much higher payments, yet there are still buyers who are willing to pay these high payments to buy a home here in the area. So what I would say to home buyers out there is be patient. Obviously, at the end of the day, it comes down to getting a payment that is comfortable for your financial situation. If you're able to get a payment that makes sense for you and is comfortable and you feel you have job security, I'd say go for it. If you maybe don't feel like you have a lot of job security and you don't want to get a payment that is uncomfortable for you, just maybe hold off for a while. I think prices may continue to go down for the rest of this year in some of these counties, maybe not in San Mateo County or Santa Clara because those two seem to be very competitive still, just because, that's in the Silicon Valley area, which is highly coveted. Home sellers, I would say if you want to move within the next few years, now might be a good time to put your home on the market. I think the prices are going to continue to go down for a while. We don't know exactly when the Fed is going to start decreasing interest rates aggressively to bring us out of the recession, but that may be coming as well. So if you don't need to move within the next 2 years or so, maybe hold off for a bit and wait for those interest rate cuts to happen, because what typically happens is when the cuts happen, buyers get excited and a lot of buyers that were waiting on the sidelines jump back in the market at the same time, which increases the bidding, which increases the competition per listing, and that is when it's a really good time to sell. We are still in a seller's market, but it's far decreased from what it was last year. Last year, we were still seeing, 5, 10, 20 offers on a lot of homes. This year, we're seeing that once in a while, but for the most part, the best properties are getting 2 to 3 offers. Now, I hope this was helpful for all the buyers and sellers in the market. As always, please feel free to leave me a comment. If you have any predictions about what might happen in the market, or send me a DM, I would love to talk to you and kind of go over the numbers and help you understand what's happening from my perspective as an agent being in the market every day. And as always, let me know if you have any questions. Hit me up on Instagram or TikTok, or send me a text or give me a call, and I'll be happy to talk to you.